Financial markets have been undertaking a re-rating of Spanish and Italian assets over the last month, and this comes on top of the noticeable gains that have been evident in equity markets since the July announcement by the ECB of the OMT operation. The subsequent narrowing of sovereign credit spreads have also produced a very large and unidirectional move in markets. What are the prospects from here? Well, IDA Global would first note that there has been flows that have returned into Spain and Italy. And particularly if we look at this chart here, this shows from the monthly balance of payments data for both Italy and Spain, the portfolio inflows, that's bonds, equities, bank bonds, that are being purchased by overseas players. And this has been sort of consistently better, particularly in September, October and November. But the trend has definitely improved since the late summer period. Nevertheless, it's worth pointing out that the scale of outflows that were evident really from August of 2012 have not been reversed in terms of these portfolio flows. Secondly, if you actually look at the Spanish balance of payments data, then it shows that there's continued money being pulled out of the Spanish banking system by non-residents. That's both a withdrawal of deposits and additionally a redemption of bank bonds. We feel that this is really the Achilles heel for Spain and Italy. Ultimately, their asset markets are driven by shorter-term flows, and if these flows run out of steam and the portfolio inflows slow down or even reverse, then we can see quite dramatic movements in Spain and Italy. Another way of looking at this is to look at the net external debt. This graph from the EU Commission shows that Ireland's net external debt has shrunk sharply because it's had an increasing current account surpluses, that the Greek net external debt has also shrunk sharply, but for the different reason of a restructuring of Greek government paper, but that in Spain and Portugal we still maintain large outstanding net external debt positions. Bigger picture, if we look at the overall holdings in Spain, Italy and indeed France, what we find is that the holdings are still extremely large. On a gross basis, they are the order of magnitude of 1.8 billion for Spain, 2.2 billion for Italy, and those are in trillion, and 6 trillion for France. So extremely large overhang of asset positions. If you look at comparable figures for Portugal, Greece and Ireland, there was a very significant liquidation of private sector holdings across all categories in the period between 2010 and 2012. The outflows that we've seen in Spain and Italy in 2012 are only a portion of the total outstanding assets that are being held by non-residents. The situation is also being hurt by the ongoing recession that we see in Italy and Spain. If you look here at the key sort of consumption data, you'll see that the grey line at the bottom showing Spanish retail sales remains extremely weak and causes real doubts about the ability of Spain to stabilize and to produce recovery into the second half of 2013. This is one of the key fundamental sort of concerns that we have, and feel that ultimately yields can move higher as we progress through into the second quarter. The biggest issue, however, is politics and political unrest. If you look at the crisis situation that we've had in Europe, the worst social unrest has been in Greece, which we've seen on a repeated basis in 2010, 11 and 12. At times this has become violent. Nevertheless, this scale of protest against government austerity is still smaller than the scale of protests that we saw, for example, in the UK in 84-85 with the miners' strike, where close to 10,000 people were arrested, or the near revolution in France in 1968. Idea Global would continue to warn that there's a 25% probability of major social unrest on this scale occurring in Spain during 2013. Such a scale of social unrest could threaten a U-turn in government policy and undermine not only Spanish but Eurozone financial markets. This is a situation that we feel needs to be watched closely, and we feel that the recent profit-taking phase has only cleared out a degree of the positions that have been set up since July 2012. If we get any major political or social unrest, we feel that we could see a more substantive reversal of the flows since July 2012. If you want to talk about this in more detail, please feel free to contact me, Mike Gallagher, Director of Research at Idea Global. Thank you.